Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a 5-wave impulsive structure to the downside, currently working on the blue wave 4 after this wave 3 is then finished in an internal 1, 2, 3, 4, 5-wave structure. The common target for your wave 4 is between the 0.236 and the 0.5 Fibonacci taken from the start to the end of your wave 3, giving you a target area between 58.1k and 59k. The invalidation for this scenario is price moving to the upside, touching the 0.618 at 59.3k. Preferably, this wave 4 is finishing after the 0.382 Fib time. This is a Fib time taken from the start to the end of wave 2 to the end of wave 3 and is sitting on Tuesday the 17th of September at 6 a.m. Central European time, meaning preferably we are continuing a range here till at least tomorrow morning. Now mind you, we also have news tomorrow morning, so it could be interesting to range inside this wave 4 here until the news hits in the afternoon. After wave 4, we are looking for a wave of 5 towards the downside to finish an impulse. We do have some interesting support to the downside. Currently, as you can see, we are at support, which is the white box here, 57.5, 57.7k, which includes this weekly naked point of control here. But we do have some support below us, 56.8 to 56.9k. When we count impulsive structures on the chart, it is also interesting to look at channels. They can be very valuable and give you a lot of information. What you see on my chart here is a base channel taken from the start of 1 to the end of 2 to the end of 1. And what you want to see in an impulsive structure is a wave 3 to break the channel, in this case to the downside. Wave 4 then moves back towards the channel and then you get your wave 5. If we then look at a second channel, then this one is called a trend channel, taken from the end of 1 to the end of 3 to the end of wave 2. And what you're looking for in this case is a wave 4 to hit or break the upper trend line of this channel over here. If price can continue ranging for a longer period of time, break this channel, the probabilities are higher that the range that you are forming here is counted as a wave 4, matching this wave 2. If price, however, is not going to range that long and reach the upper trend line or break the upper trend line, but instead is ranging for a shorter period of time and moves down, we have to be aware of a more bearish impulsive structure, which then is a multi 1-2, which is then counted as a wave 1, 2, 1, 2, maybe even another 1, 2, and then you get a very big wave 3 to the downside, which leads to much lower prices. Now your bullish scenario here is a 3-wave A, B, C. 5-wave A, 3-wave B, and then a 5-wave C counted as 1, 2, 3, 4, 5. Now wave C here is very extended, moving to the 2.618, a trend-based fib extension taken from the start to the end of A to the end of wave B, which is a very uncommon target for a wave C. The common target for a wave C is between the 1 and the 1.236 trend-based fib extension, which of course we passed. The 1.618 is still a target for a wave C, but that's already a little less common, and then the 2.618, it reduces probabilities. We're looking for a wave C. Also here, you could have used the channel. You take it from the start of A to the end of B to the end of wave A. And what you generally like to see in a zigzag structure, which is what we look for here, ABC 535, would be for wave C to end somewhere close to the lower trend line in this example, which of course didn't happen because we significantly broke the channel, increasing the probabilities for an impulse to the downside. On the lower time frame, it's always interesting to keep an eye on the 886 here, which is taken from this low to the high. As you can see, it is not touched, but if touched at 57.5k, it immediately increases the probabilities for price to take this low sooner or later as well. If we then look at the CVD divergences, then on the 4-hour time frame, which is what you see here, we do have bullish CVD divergences, but these are actually not interesting. What we like to see is on a 15-minute time frame CVD divergences. The local CVDs are always more interesting. You can see that we have a bit of a bullish CVD going on here, but it is not yet interesting because we haven't actually changed like any market structure. We are still looking for bearish market structure over here, as you can see. And in order to at least turn more bullish or look for like a bigger retracement up, what I would like to see is price to change the market structure locally and then see some more bullish CVDs coming in as well. Of course, when we look at Elliott waves and the scenarios I've just covered, the probabilities at the moment are higher to still look for lower prices. So yeah, we have a bullish CVD here locally, but we haven't changed market structure. There's not really a sign of strength just yet. So for me, this is not something I actually look at. I want to first see significant market structure. I want the chart to show me it is interested in moving towards the upside, which at the moment is not yet the case, right? But at least you know what I'm looking for. Now, if we then look at the news, as mentioned, tomorrow we do have news, 2:30 p.m. Central European time. Make sure you trade safe because it might increase the volatility on the chart. I will be live on YouTube at that time as well, so we can observe the price action together. If we then finally look at the probabilities of the different scenarios, then on the 1 hour time frame over here, the probabilities are higher for an impulse to the downside compared to this being an ABC to the downside. If price can move to the upside and hit the 618 at 59.2k, which is an invalidation for wave 4, then the probabilities do switch towards this to the downside being an ABC, or potentially even still a wave W, X, and then a wave Y as well, which I've written down over here. This would be an extended corrective structure, a bigger 3-waver, but it's not yet relevant unless you actually hit 59.2k. I wouldn't really like to count this move to the downside so far as a finished impulse, meaning 1, 2, 3, 4, 5, right? And the reason for this, which I write here as well, is that the previous range that we were in, which is this range over here, is a lot shorter in time compared to your wave 2 over here, right? So it's not looking great because by far most common for a wave 4 is to be longer in time than a wave 2. But this range over here did not even reach the 0.382 Fib time, taken from the start to the end of 2 to then the low over here. You can see the 382 on my chart. It didn't even finish after the 382. So it reduces the probabilities that this range here is a wave 4 matching this range here being a wave 2, and therefore probabilities for the impulse are better to count it as a 1, 2, 1, 2, 3, 4, 5, 4, 5, where this is 2 and this is 4. Makes a lot more sense. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.